The actual Chinese expression is hearing something 100 times isn't better than seeing it once. This is an excellent explanation of looking at the U.S. debt clock, which quickly reveals how deep our debt has grown.
The rating agency Fitch has downgraded the U.S. government's debt. It's a dramatic move that signals rising worries the U.S. might not be able to meet its fiscal obligations. The United States' prior rating, a AAA rating, was second to none. Tuesday's one-notch downgrade to AA+ sparked outcry from the White House and from U.S. Treasury Secretary Janet Yellen, who called it arbitrary and based on outdated data.
I strongly disagree with Fitch's decision, and I believe it is entirely unwarranted.
Fitch said it was concerned about both the rising level of American government debt and whether the country would, in the future, muster the political will to pay its bills. But Fitch wasn't just alarmed by rising debt and political gridlock. It also cited the January 6th Capitol riot. The rating agency highlighted events from January 6, 2021 in meetings with the Treasury ahead of the downgrade decision. Fitch referenced polarization with both parties, saying, quote, "The Democrats have gone further left and Republicans further right, so the middle is kind of falling apart, basically," adding, "We don't fault one party or the other for the fiscal situation."
Fitch's decision is puzzling in light of the economic strength we see in the United States. I strongly disagree with Fitch's decision, and I believe it is entirely unwarranted. Its flawed assessment is based on outdated data and fails to reflect improvements across a range of indicators, including those related to governance, that we've seen over the past 2.5 years. Over 13 million new jobs have been created since January 2021. Our unemployment rate stands at 3.6%, near historic lows. Overall annual inflation has declined every month for the past year, and our economy continues to grow. In the longer term, the United States remains the world's largest, most dynamic, and most innovative economy, with the strongest financial system in the world.
Hello, traders. Gary Wagner here. It is 1:10 in Honolulu, 7:10 in New York on Wednesday, 2nd day of August, 2023, and this is the daily report for gold and silver. Gold futures opened at $1,989 and fell to a lower low today than yesterday, a lower high, of course. It is trading in Australia now, slightly off of that price at $1971.50. A bombshell hit the United States when Fitch Ratings downgraded the United States to AA+ from AAA late Tuesday. They cited expected financial deterioration over the next 3 years, as well as growing government debt. Fitch was the second major agency to cut off the country's ratings. In 2011, Standard & Poor's stripped the country of its AAA grade. This daily chart clearly shows not only the technical damage that occurred over the last 3 trading days, but the major damage over the last 2. Yesterday, gold futures opened well above the 50-day moving average and broke solidly through that. Also, this type of candlestick is called a marabazu, meaning shaven head or bald head, because it has no upper or lower wicks. This was followed by today's activity that opened well below the 50-day moving average, lower low, lower high. Currently, gold is trading overseas at $1,971.40. The U.S. dollar had a partial effect on that, with mild dollar strength adding to the sell-off today in gold. The dollar itself had a moderate gain of 0.359%, and the index is currently at 101.995. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.